Welcome back. I'm going to show you how to make 50 pips every day trading US30. So the first thing you do, you check high time frame key levels. In this case, we have an ICT fair value gap here. It's on 1 hour time frame. You see, this is a low. There's a fair value gap, FVG. So what do? A fair value gap, as you can see previously, we were having a bullish trend. The price was in a bullish. So we expect to see support from this key level, which is H1, fair value gap. So if you look closely, what do you see? There is a low inside there, an area of an inefficiency. This is a low inside a fair value gap. Let me mark it using a trend line. This is a low there. So, so liquidity, um, liquidity in this case was the low. The liquidity inside an area of an inefficiency. So this is a turtle soup model. Okay. So you wait for price to generate a low inside the fair value gap and then wait for the low to be taken out and then take a trade. You see? So what do? This is on high time frame. The price generated a low inside a fair value gap. So this is a high probability fair value gap. You know, I see sometimes people say that a high probability fair value gap is the one that is coupled to a breaker or coupled to an order block or something. Those are just stories. If you see a low inside a high time frame key level or a high inside a high time frame key level, like the low inside the fair value gap, doesn't matter even if it's a retracement or a counter trend move. You're going to make at least 50 pips trading you're starting. So let me drop down to the lower time frame, show you the entry and how to take the entry. So as you can see that we were selling, so now we want to get into a buy model. So I'm going to drop down to the lower time frame. All right, it's pretty easy. Look here. So this is the low. This is where the low was taken out. This is where the low was taken out. The low inside there, each one, fair value gap. So let me take out this. Let me remove all this. So because you're shifting from sell model to a buy model, you look for the previous area of resistance and then wait for it to be validated. So what do you see here? The most discounted key level that can give us that can be violated, that you can anticipate to get violated, is this fair value gap. You see, 3 consecutive candles. The first candle's week, third candle's week. There. So wait for price to violate the fair value gap. So when does the fair value gap become violated? When the candle closes above the fair value gap. You see this candle closed above the fair value gap, and this turns into a inversion fair value gap. So it was the previous area of resistance, now turning into an area of support. And when using these fair value gaps, they're known as advanced market structure shift. Advanced market structure shift when fair value gap fails and gets used as a inversion FVG. So in this case, the price has not shifted yet bullish because there's no the church. The displacement has not yet happened. I'll show you where the displacement happened. But in this case, because we want to take something like a sniper entry that does not have much of drawdown, like this was a zero drawdown entry. As you can see, once the candle came and closed above it, once the candle came and closed above the fair value gap, it turned into an area of support. Price came inside, and then you take your entry here, put your stop loss below the low, right here. So how many pips did this go? Let me show you. It's how to make 50 pips. Easy stuff, easy stuff. You don't. So from the inversion, you see 50 pips there. but still went more. Of course, you can see. You see, you can just do that. See, around 78 pips. But now look here. How much were you risking as your stop loss? Because the stop loss is placed below or above 3 PDRAs, 3 key levels. So from the inversion to the low, 10 pips. See, 11 pips. These are very small. This is a very small stop loss. So if you are targeting 50 pips, risking 10 pips, it means that's a ratio of 5 is to 1, which is a very good risk reward ratio. So this is advanced market structure shift. So when did the price do a change of character or market structure shift? You see? So the last series of buying candles before an aggressive momentum that swept the previous low, which is this low. This is referred to as break of structure. So once the break of structure happens, we know that the last buy candles before that aggressive momentum to the downside is our order block. So these three candles like this, see, once the price came and closed above, what it did close above here. This is displacement. This is where you have change of character. These are order blocks now turning into an area of support. So they become a breaker block, sorry. Breaker block. As I showed you about 2022 model. So the price came once the candle closed above the order block, turned into an area of support. Prices come one time, went up, and even now from the zero point 0.5 level, you could still take an entry. And as you can see, the price is still buying. So if you take a trade here, put your stop loss below the 3 PDLA. Oh my god. I can't even mention the right name. Forgive me. So, but this is it. The breaker. Put your stop loss below here. And that's it. That's it with 50 pips. Like, so let's say I was buying the second time from there. The main threshold will be 30 pips.